What are some of the benefits of doing a 1031 exchange? Why would you want to consider this? I know the primary reason you mentioned is deferring taxes, but give me some more like depth into that. Yeah.
Well, I mean, ultimately that's what you're doing. Ultimately, the whole point of the 1031 is to defer taxes. So if you bought a property for $400,000 and today it's worth $1 million, you have a $600,000 gain in that property. And if you don't do an exchange, you may be writing a check to the government for a couple $100,000. And so the first reason we do the exchange, obviously, is to not pay the tax man. Now, before I go much farther, remember 1031 does not eliminate the taxes, it just defers the taxes.
Okay.
So if you exchange from property A to property B, and then later on you do another exchange, property B to property C, and now you're sick of real estate and just cash out on property C, you pay taxes from A, B, and C. So you are just deferring the taxes. But
so you could pay a lot essentially at the end of that.
You could. But the question always pops up, well, why bother then if I'm gonna have to pay the taxes anyway?
Yeah.
Two reasons. Number one is if ultimately, if I have to write a $200,000 check to the government, but I don't because I get to use that money to buy more real estate, it's like getting an interest-free, no payment loan from the government because you get to push that out. And ultimately, you could push this out your entire life. And then when you pass away, your heirs get what's called a step up in tax basis, and all of the gain that you had disappears when you die.
Oh, wow.
Yeah. And so that's the real advantage of the 1031 is hopefully you never have to pay the taxes because ultimately it is the step up in basis under current tax rules allows your heirs to completely eliminate any tax liability.
Okay. So eventually, if they're long-term, if you're a long-term planner, and you say this is going to be my retirement, you buy a property, you keep 1031 exchanging into it. When you reach the end of your life, which may not be for 200 years, whenever that is, your son or daughter, whoever inherits the property, could eliminate all the deferred taxes that you had.
Yep.
Oh, wow. Okay.
Now, one thing to note is this works if you inherit the property. It does not work if you give them the property.
Okay.
So that's the important thing to realize. That step up in basis is specifically for people who inherit property.
That's a good distinction. Does it matter also how trust is held, if it's in probate or not?
No, whether it's a will or a trust or what's called intestate, which means neither. Yeah. The big difference between how you inherit a property has to do how long it takes to go through probate court or whatever to get to you. So if you have a trust, it doesn't have to go through probate. It can happen very quickly. If you have a will, it has to go through probate. It could take a year or two, sometimes longer. If you have nothing, it could take 3 to 5 years in going through probate court. The key is how long before that asset actually gets put into the name of the heirs.
Okay.
And so by the time you inherit something, it might be 2-3 years after the person passed away. Now there may be a gain in the property. Yeah. When the person died, it was worth $1 million. Now it may be worth $1 million too. So that's why it's always been. I'm a big fan of having a trust because a trust is can fairly easily and quickly get the assets passed on to the heirs.
Okay, that makes sense. And so one of the key benefits of doing a 1031 exchange is instead of paying the taxes immediately when you sell the property, you're deferring that to the next property and you're taking that savings and reinvesting it.
Correct.
Instead of spending it right away, which gives you more money to invest.
Yep, exactly. Instead of having to give that money to the government, you get to use that money yourself to buy more real estate.
Okay, that makes a lot of sense. It's a smart thing to do.
We think so.
Yeah.